Today, folks, we're going to talk about the pivotal news around Mixed Martial Arts Group, a company that's looking to provide tools and resources to the global combat sport community, trading on the New York Stock Exchange under MMA. This is part of sponsored content, as I leave all the disclaimers down in the description below. This does not constitute financial advice and only represents opinions of my own. But the reason we're discussing it today is firstly the pivotal news, and then we'll break down the company's business model a little bit more. But Donald Trump Jr. joins Mixed Martial Art Group's MMA Inc. as a strategic advisor. And just reading into this, Mr. Trump Jr. joins the company at a time of significant growth, working alongside Conor McGregor, MMA Inc.'s most prominent investor and a global icon in the combat sports. McGregor's shareholding and active involvement in the company underscores his long-term commitment and his belief in the opportunity for MMA Inc. to transform over 640 million global mixed martial arts fans into active participants. And we've got a little quote here that the incredible success of the UFC has proven just how powerful mixed martial arts has become, building one of the largest global fan bases in all sports. That growth has inspired millions of people to take up martial arts training, improving citizens' physical and mental fortitude while creating commercial boom for coaches, academies, and small businesses servicing this market. I'm deeply passionate about supporting small business owners to thrive and am eager to help MMA Inc. connect these businesses with fans who want to learn, train, and push themselves to be their best. There's also some quotes from Conor McGregor, but this is absolutely fascinating to say the least. And most recently, they're basically advancing a tokenization with Solana, testnet minting, and NVIDIA's AI infrastructure alignment. Apparently, MMA Inc. launches its proprietary Get Paid to Train utility token on the Solana testnet to stress test tokenomics, basically staking and reward mechanics as part of its crypto and Web3 strategy, integrating of NVIDIA AI infrastructure to support large-scale fight analytics, real-time model validation, and performance scalability with AI-powered analytics to gamify participation, training, and reward progression to incentivize engagement and conversion with 700 million global fans of mixed martial arts. Testnet phase enables XP accumulation, performance tracking, and AI-based insights to validate engagement loops. Data from the AI layer will inform governance, reward calibration, and ecosystem scaling. And then mainnet deployment remains on track for Q2 2026 pending success audits and testing outcomes. So just to kind of break this down a little bit, basically they have amassed a substantial community footprint, which they expect to expand and monetize in the coming years with 5 million social media followers, 560,000 user profiles, 18,000 published gym profiles and more, 800 plus verified gym partners, and 50,000 active students. And if we take a look at the business model, the go-to-market approach itself with this three-pronged strategy of training and participation, basically upfront and monthly training payments by participants at an average of 150 to 550 per month per participant. They have business tools, which is going to be a monthly SaaS revenue plus transaction fee paid by the gym owners and coaches at around $49 to $149 per month plus the transaction fees. And then they have the community and commerce platform, which is B2C, which is free and premium subscription, and B2B, which is partnership and sponsorship revenue. This is expected to be priced at around $9 a month for the premium subscription, which is going to be subject to change, obviously. But just to get an idea of the scale and the markets that they have capable here, they do break this down quite nicely. Just to give you an idea from the training participants, in scenario one, just with 65 gyms could equate to 3.1 million in potential revenue. If you get up to 2,200 gyms, it could be over 100 million. If you take a look again from the business tools themselves, just 250 gyms could generate 0.4 million, up to 6,600 gyms representing about 10 million. And then from the community and commerce side of it, in scenario one, if they get 260,000 user profiles, with a user profile, assuming 10% will pay, 26,000 could equate to about 2.8 million in potential revenue. Scenario two, if you end up with 6.4 million user profiles, 640K assumed to pay, that could equate to almost $70 million, right? So there's a lot of potential. And let me just point out how quick this company is moving. They've had some pretty major milestones coming since IPO. With basically MMA Inc. and UFC Gym Group announced 2025 program expansion targeting $7 million in annual revenue across 150 50 locations. I mean, the news goes on and on here. I think some of the big highlights too is they announced record-breaking signups for the first quarter and 192% year-over-year growth with launches of 30 programs across 4 countries. But to just kind of like encapsulate all of this, if you take a look at the reasons to keep this on your radar, they're expanding that global footprint, guys. You know, we're talking about presence in over 18,000 gyms across 16 countries, rapidly growing market position with an $18.6 billion martial arts and combat sport industry, diverse revenue streams, as we've discussed, strong digital community, comprehensive platform ecosystem, innovative acquisition strategy, apparently strategic acquisitions including gym management and fintech platforms, enhancing service offerings and market reach with high margin business models, a debt-free balance sheet, market leadership in combat sports tech, and experienced leadership. These are just a few of the reasons in a brief highlight that makes mixed martial arts such an intriguing company for those that are looking at the sport from an investor standpoint. But I will pass that question off to you. I'd love to know what you think about this company down in that comment section. But on that, as always, I look forward to catching you in the next one.